Hello, this is our BSG team presentation for Industry 7, Company I. My name is Sandy, and I'm a MIS major focused on the branded and private label production. So for our original strategy for branded production, we wanted to maximize production in Asia and use it to full capacity. And then we wanted to do like a more moderate production level in North America. And then for production facilities, we wanted to invest early to boost product quality of our shoes and then focus on scaling operations in Asia, which we plan to have more facility expansion in the later years. For distribution and warehousing, we wanted to prioritize distribution channels in Europe and Asia, hopefully to gain more market share there later. And then for internet marketing, we wanted to go aggressive early on to make more investments in Europe and Asia to help build the brand awareness there, and then have more moderate efforts in North America and Latin America. For wholesale marketing, our original plan was to reduce spending here and then reallocate the resources to spend in more effective channels. And then for private label operations, we wanted to use the remaining production capacity that we have in Asia for private label contracts and then maintain a more balanced approach for our North America facility. And then for celebrity endorsements, we didn't want to make an investment really early on. We wanted to see how it really plays out for other companies and see if we wanted to invest in celebrity endorsements as well. And then for corporate citizenship, we wanted to take more moderate steps to enhance our brand image. And for last, the finance and cash flow part, we wanted to implement a small stock buyback to maintain our shareholder control. And we were going to consider loans if we needed it to fund quality improvements or expansions of our other facilities. And then looking forward, if we had more time in the later years of this BSG game, for my part, I would monitor spending on the branded production so that we have a good ROI, and then also continue to maximize our advantage in the private label part because we were doing pretty well compared to other teams on market share in all four different countries, regions in our private label operations. And then for takeaways, one of my takeaways is that change is sometimes necessary to stay competitive because a lot of those original plans that we had to modify a little bit because there was other factors that made us have to make some changes in order to stay competitive in this industry. And then my second takeaway is that communication and collaboration is very important, especially when we're working as a team and we're focused on different parts, but we have to communicate in order for our company to do well and in order for us to implement our strategy.
Hi, my name is Sam Riddle. I'm an MIS and OM double major, and I was responsible for distribution warehouses, production facilities, and finance, partly because I was interested in these and partly because I'm an OM and it made sense for me to have these decisions. I'm going to talk a little bit about some of the strategic adjustments that we had to make to our original strategy. Firstly, while we came in knowing we wanted to do internet marketing, we didn't realize how much of an impact that wholesale marketing would also have on our internet market share. So we ended up balancing our budget pretty evenly between internet and wholesale based on how much demand we were seeing in both areas. In conjunction with that, we also invested heavily in our SEO, our brand advertising, and our celebrity endorsements because that affected our market share in both internet and wholesale segments. Again, just a really aggressive marketing strategy, which we didn't anticipate having originally. As part of that aggressive marketing strategy, we offered free shipping as opposed to any of our competitors, really. And we used price as a tool to control our demand because our demand got super, super high. We ended up having to raise it to control that, but just in general, staying under our competitors. We ended up backing out of Europe a little bit more than we thought we would, and we invested more in Latin America than we would, just in general to achieve a very generic strategy across all four regions, just similar level investment all across. We also opened a facility in North America and in Latin America, and we the North America facility open, which we didn't anticipate either of those moves, just to keep up with capacity because we needed so much. And finally, we invested heavily in private label production because that turned out to be super lucrative for us, and we were the industry leader in that during our entire time playing the game. Quick note on our financial performance. On this is our cash flow statements. Once at the beginning of the game and one at the end. Strong growth across the board. Not really too much to draw attention to here. Just looking at those receipts from footwear sales, increasing almost 4 times over what we were at the beginning of the game. Really, really strong growth and strong investments. Similar thing with our balance sheet, just strong growth across the board, especially in our assets. And our total liabilities actually went down, which really helped us. We were heavily focused on being financed by shareholder equity, and even after buying back a lot of stock. So overall, very, very strong financial performance. As we can see here on this slide, starting out really low earnings per share, pretty average return on equity, low stock price, low credit rating, image rating, just really finding our footing in the game, trying to figure out what we needed to do to make things work. And we ended up figuring it out. We met all of our targets. We exceeded them quite strongly. EPS, $16 a share, return on equity, 31%, stock price, $360, which is the highest stock price out of anyone in our industry. Credit rating, which was highest in our industry, and our image rating, which was also highest. So overall, very strong financial performance, met all of our key performance indicators. Finally, I want to talk a little bit about things that we would have done differently, at least that I would have done differently. Or at least looking forward, I would have loved to have opened a production facility in Europe. Kind of already talked about how we opened one in Latin America. And I'd love to have done that in Europe too, just because we really needed that capacity. We ended up overselling for the past 4 years. So we really need that extra facility. And moving forward from a financial perspective, I would also have bought back a lot more stock just to improve our return on equity even more. And then finally, just some takeaways from the game. My takeaways, especially after doing the financial side, cost management, it belongs to every department. There's not any one department that it falls on. Marketing has to do one thing, distribution's got to do another thing, production's got to do another thing. Everyone plays their own part. And you have to monitor all costs pretty closely. Otherwise, it affects the organization quite drastically. Every small change you make is really important. And then finally, I really understood the importance of marketing more after playing this game. It's crazy how if you don't sell something, you can't succeed. You need to be able to make a sale. And so investing heavily in marketing did turn out to be really important for us, and I didn't really expect that. And I'm glad that we learned that.
Hi, I'm Peter. I'm a marketing major, and I'm focused on celebrity endorsements, wholesale marketing, and internet marketing. Our strategic performance, this is a quick snapshot of our internet share in Asia, which were our 2 strategic focuses. We started out a little above average and ended with the largest market share in Asia, as well as in every other region. A key part of this was maximizing our product line, as well as keeping quality high and pricing competitive against our competitors like C, G, and H. In fact, we had so much internet demand that we had to raise prices significantly at the end to keep our demand under control, because our production capacity had a hard time keeping up. A big part of our success was closely monitoring the reports available to us. We learned early that by forecasting and being accurate with it, the game gave us bonus points, so we quickly started adjusting our forecasts to capitalize on that. This helped us in the first half of the game, and towards the second half of the game, we started winning more and more. We won the Leapfrog Award to the point where we realized that the projections wouldn't matter as much, and so we just focused on doing better and better and increasing our performance. We won Leapfrog Award 3 times for outstanding performance, more than anyone else in our industry. We knew early that corporate social responsibility would help our image significantly, so we became an industry leader in CSR, winning the CSR award 4 years in a row and placing second in 2 other years. Looking at some key metrics that we had to monitor, image, internet revenue, net revenues, total revenue, and earnings per share. And we saw noticeable increases in all of these metrics over the course of the game, especially towards the second half. It's kind of a comeback story, and we're very proud of the progress we made. We led the industry in internet revenues, and we would have become an overall industry leader if we had more time. Metrics highlighting our performance in our key strategic areas, once again, in the internet and Asia. Our focus on slowly improving quality and aggressive marketing allowed us to raise our prices over time. This turned out to be a winning strategy as we had industry-leading internet market share for the majority of the game. With enough time, we would have also been able to get a start on our wholesale efforts as well. Finally, we absolutely dominated the private label sales in every region. This was a key source of cash for us and really helped us to stay on top. We were so good at this that we were able to charge whatever price we wanted, regardless of the market share limitations, which led us to having outstanding profit margins in private label sales, better than anyone else in the industry. Looking forward, I would have continued to monitor celebrity contracts for renewal, especially with those with high appeal in Latin America and Asia Pacific regions. And in terms of key takeaways, um, effective communication was very key, and being open to feedback. Every department was very influenced by one another, which meant transparency was a must.
Hi, my name is Jade Jones. I am a management major with a concentration in human resources. As such, it was appropriate for me to focus on social corporate responsibility and compensation and training. So jumping into our competitive dynamics here, this slide kind of shows that we started pretty low on the scoreboard. It took us a couple years to figure everything out on the competitive side. But by year 20, we were actually outperforming everyone else in the industry. We topped the leaderboard in year 20. If we'd been able to continue, maybe we would have even made it to first overall. But this is kind of because the things on this next slide here dives into our strengths and weaknesses. We use Asia as the context of this example because that was our strategic target market. So we started out knowing, of course, we wanted to focus on the internet and on Asia, and invested heavily there to achieve that very early advantage in this area. However, by year 14, 15, we figured out that advertising and wholesale, as Sam touched on earlier in the presentation, those were subsets that are really important to success in the internet segment. And so we had to end up investing heavily there as too. Also around that year 14, 15 mark, everything started to come together. Peter kind of figured out marketing. I really figured out HR and CSR. So our demand can increase significantly as a result, so much so that we sold out in every region for the last 4 years. All this happened while keeping our prices below the industry average. And so our takeaway here is that we're the industry leader in the internet market, and we defined our competitive dynamics as such. However, it required a lot of close monitoring from all departments to maintain this advantage. So next, we want to provide kind of a snapshot of our competitor strategies through the lens of Asia in the internet segment, which is the context we want to look at our competitors through. We were never really concerned with B, D, E, or F. B and E had quantities way below us. D was late to the game, and F didn't care about the internet segment at all. So to stay ahead of those guys, all we had to do was keep our quality up, our SEO high, and endorse celebrities that were popular in the Asia market, and we stayed ahead of all of them. We always knew that our primary competitors were going to be A, C, G, and H. They all adopted more of a high quality, high SEO, and high price focus. So to kind of separate ourselves from them, we priced below them and offered free shipping, which gave us more of a best cost strategy or hybrid approach. And none of them kind of ever changed to adapt more to that. So that made us be able to dominate the internet market share and beat everyone in every region for at least the last 3 years in that segment. In terms of overall performance, by the end of the game, we overtook A&H, and if we had more time, we might have beaten GNC as well. Finally, if I would have been able to make decisions for the next 2 years, I'd already maxed out social corporate responsibility pretty much in all aspects. I made all the investments there were to make, and we were winning awards for CSR for at least the past couple years prior to year 20, so there was nothing more I could have done there, but I could have considered increasing incentive pay to boost productivity and reduce the reject rate even further. Finally, my takeaways. I liked how we assigned parts according to our strengths and weaknesses, but we also made sure to, at least in the first couple years, get back on Zoom, open ourselves up to constructive criticism. And also, my second point there, we all looked at each other's progress and we looked at the business holistically. So we all offered fresh insights on each other's decisions and made sure that our actions were lining up with what we actually thought was our strengths. Overall, this was a great exercise in strategy and taught me a lot about collaboration and just the business world.